Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help. As a corporate partner, you will gain access to a whole ecosystem of innovation. Discover startups that meet your tech interests. Stay updated on the latest trends and network with industry peers. We will help you during every stage of your innovation journey, no matter where you are and where you want to go. Get in touch today. How do you track your team's innovation efforts? However that is, we've got an easier way. Let us introduce Playbook. Playbook is Plug and Play's innovation software. It is an exclusive tool only available for our ecosystem's corporate partners. With it, you and your team will be able to browse your curated startups database, create, discover, and rate lists of startups, track your engagement, pilots, and investments, analyze data from the tech ecosystem, organize private sessions with select startups, and so much more. Hundreds of corporations count on Playbook to empower their innovation journey. Get in touch to start using Playbook today.
Hello, good morning, good afternoon to everyone, and welcome. Thank you all for joining our Innovation Day, all about embracing sustainability in the insurance sector. I am so happy to have you all here today. Although virtual, it is still great to be able to connect with you from all over the world. Being virtual gives us the chance to have our colleagues here from Singapore who will give us their perspectives on this topic later in the session. During this event, we will touch base on how sustainability, a topic on everyone's mind, is impacting the insurance sector. We know that sustainability is not only an ethical need, but it's becoming more and more an urgent need for sustainable development, protection of the planet, and our future generations. We will try to address these issues through our Fireside Chat, trends and insight presentations, and the 7 startup pitches that we will be hearing from today.
Yes, Gada, I'm also so happy to see you all here to talk about such a relevant topic. But why is it so relevant? Because climate change equals to insurance risk. Climate scientists have long predicted that the global climate crisis will contribute to more frequent weather events, such as storms, floods, and heat waves across the whole world. And here we are. But who is responsible for this? We are all. At its core, climate change is really simple to grasp. The more carbon dioxide emitted into the atmosphere, the higher the global temperature will rise. We are now at 1.1 degrees above pre-industrial levels. If no measures are taken, we would get to 3.2 degrees increase by 2050, and the world economy could shrink by 18%. Good news is we can still do something about it, and insurance companies are in the perfect pivotal position to help to make the economy more sustainable. Actually, 3 out of 4 consumers in Europe believe that the insurance company should promote sustainable behavior with their products. Thank you then all for being here, and we are so much looking forward to telling you more on the different ways insurance can actually make the difference.
Thank you, Laura, for laying the foundation for today. My name is Rada. I handle communications and event operations at Plug and Play in Munich. I will guide you through today's event together alongside my colleague Laura Bonamini, who you just met, from our ventures team at Plug and Play Insurtech. And we also have John Ang, Corporate Partnerships Manager for Singapore, here with us today, and we will catch up with him in a bit. Let's look at today's agenda. As you can see, the event will be structured around 1 fireside chat with 2 industry-leading experts, and then 3 innovation topics. We will begin by looking at how insurers are managing their internal carbon emissions, then how to green your investment portfolio, and lastly, how sustainability is shaping new products. For each of these topics, we will give you some insights into the market and trends we've been seeing, and then we'll listen to some great startups that are disrupting this space.
Now let's look at those startups. We are thrilled to have here 6 great startups pitching for us today, coming from all over the world. We can see them here representing Germany, Singapore, the Netherlands, and Spain. At the end of their pitch, you will have a poll asking you whether you want to get connected to the startup that just presented. We are gonna then collect all your answers and make the appropriate one-to-one introductions. You will also have the opportunity to ask the startup questions, your own questions, directly at the end of the pitch. We want this event to be as participative as possible, so please make use of the Q&A feature of Zoom to ask your questions.
Now a little bit about us. At Plug and Play, we have a very specific goal in mind, which is to help the world progress through innovation and connection, because we strongly believe this is the best way to move forward. To do so, we position ourselves as an innovation platform, which seems like quite a broad term, but I'll explain how we do this through our different activities organized our 3 main pillars. The first one being the acceleration programs. Each year, we run over 60 industry-focused accelerator programs in over 40 cities globally. We cover 18 different industries that you can see on this slide here, and today's event is part of our Insurtech Batch 8 program. Indeed, we have a global footprint. Those programs take place all over the world with over 57 offices, which allow us to better serve our partners locally and globally. Regarding our Insurtech programs, we are present in 5 locations: in the US with our Silicon Valley office, which is Plug and Play's headquarters, in Europe with Munich, which is where we are live today, and in Asia with Beijing, Singapore, and Tokyo. Our second pillar is the corporate innovation activity. So we supercharge the innovation of over 530 industry-leading corporations by keeping them always at the forefront of industry trends. Specifically, at Insurtech in Munich, we have 13 prestigious partners that you can see at the top here, with whom we are working closely together to solve their innovation challenges. Our last pillar is the venture capital activity. We invest in over 250 innovative startups per year alongside the world's best VCs. We have backed some of the best startups. As of today, we have 28 unicorns in our portfolio of investments, which I'm sure you recognize a lot of them on this slide here. In a nutshell, Plug and Play provides a complete turnkey infrastructure for startups and corporations to collaborate and thrive together. So now that you've heard a little bit about Plug and Play, it's time now for our Fireside Chat. We have the pleasure of having some amazing panelists for you here today, and I will leave the floor to my colleague, Jessica Chang, Head of Partner Success, who will moderate this panel. So Jess, I leave the floor to you.
Thanks, Gada. I hope everyone can hear me well. Well, we're super glad to have 2 experts in the sustainability area here with us today. So I would like to maybe pass it over to both of you to give a quick introduction about yourself, what you're doing. Perhaps we can start with Christoph. What are you doing at Zucker Group?
Yes, thank you, Jessica, and hello, everyone. So I'm head of sustainability at Zucker Group, and this is actually quite a new role for me. I've been in the operational business. I've been heading the Hong Kong location for 3 years. Before that, I was in Germany, and now I'm back in Germany, actually. And I think I've spotted Frankfurt in your introductory video there somewhere, just briefly. Yeah. So my role at Zucker is now, I would call it the transformational change for Zucker Group. To align us fully also at a strategic level with sustainability. We've created a sustainability compass for our own activities, which span a positive project impact, working with our clients. The second is sustainable way of working, which is our own footprint. And the third area is community engagement. And I think if I look at today's headlines, internal carbon emissions, ESG investing, and how sustainability then influences new products, this somehow is very closely aligned with this broad view that sustainability is not just about counting CO2 emissions, but it's really about aligning your whole operation and your products with the broader sustainability topics.
Perfect. Well, thanks for that very brief introduction. Looking forward to hearing some great insights on your side. But I'll pass it over to Timo from the German Sustainability Network. Tell us a little bit more, what this network is about and what you guys aim to achieve.
Yes, thanks, Jessica. Hi, everyone. My name is Timo. I come to you today from Leipzig because I'm based here at Leipzig University, so to say. Why? Because the German Sustainability Network is an initiative which was founded last year by FAIRS Leipzig GmbH, which is a spin-off from the Institute of Insurance in Leipzig or at Leipzig University. So I'm from the academic side, so to say. And what we did is in last year, having on screen and having seen all the accelerating moments concerning sustainability, to found a network, a really insurance initiative, which also addresses the wider finance sector to deal with the sustainability topic and to deal with it in a quite broad way, so along the whole value chain. So what we do is keep in mind and keep in focus the sustainability paradigm, as we have to really underline a new paradigm which is coming and which is in accelerating progress along the value chain from insurance industry. So from underwriting, asset management, compliance, up to risk management, reporting stuff. And what I'm in lead, or what my role is in our network, in our initiative, to at first, of course, get in contact and stay in contact with the insurance industry and the broader interested community, but in special to have in mind and keep in mind all the topics and questions concerning firstly asset management, and secondly all the distributional stuff, the sales topics. And in a nutshell about the GSN, which is our German Sustainability Network, for short, GSN. As I mentioned, we started last year, I think at the 1st of June, so 1 year later. What has been done and what is the in development. By now we have more than 70 community members, which are companies and mainly from the insurance industry, as I mentioned before. So more than, I think, 60 insurance companies that are in our network by now, and the network is still rising. So good achievement by now, and which just underlines, and that's my last sentence, the urgency of this sustainability topic and paradigm. And yeah, nice to meet you here today, and nice to have the fireside chat with you.
Well, thanks, Timo. And so we have about 12 minutes or so for this fireside chat. But before we jump into it, congratulations on the first anniversary of GSN. I think tomorrow is the first birthday. That's yes. How you do it. But before really looking into, what kind of opportunities there are in the insurance space regarding sustainability, I want to go back to maybe what are some of the main drivers of, sustainability in insurance. Perhaps in that regard, we can start with Timo, and I think regulation is a huge piece over here. Could you tell us a little bit more about, what actually drives sustainability in Europe?
Indeed. I think it's 3 points to sum it up. Firstly, it's, as we mentioned before, the fact that the world is changing and we have to change to have the world in a good circumstance. So 1.5 degrees CO2, the Sustainable Development Goals. So at first, it's of course a political topic and the paradigm that comes from the fact that world is changing. Secondly, and that derives from it, it's of course regulation. So I speak for the European continent, for the European Union. We have a big cluster of regulation that is in that was developed during the last months and is active by now. So from the EU taxonomy, which is the classification system to define what are sustainable activities, going on to transparency regulation, Offenlegungsverordnung, SFDR, Sustainable Finance Disclosure Regulation in English, up to rating topics. So there's a big bunch of regulation that impacts the finance industry and especially insurance industry. And third point, customers want sustainability. So if you have a look at market research, mainly the thesis and the hypothesis is that customers will get more and more into sustainability, and so industry is to keep all the topics in mind, addressing strategic perspectives.
Mm-hmm. Sounds good. And then I would like to bring it to Christoph, perhaps. Like, is that what you're witnessing in the APAC region as well, or any comparison that you can bring between the two kind of like areas that we're speaking about?
Yes, so I would certainly say that APAC is also affected a lot. But as Timo has said, the EU has started early with this, and there's actually an impressive amount of regulation and also an impressive speed with which they're pressing ahead. The EU taxonomy is already complete for the area of climate change, so climate mitigation and then climate adaptation. But we are now seeing 4 additional goals that include circular economy, that includes biodiversity. And so this is only expanding. We've not seen the end of this ambitious attempt of defining what is green. And if we look at Singapore and Hong Kong, then these financial hubs, of course, influence APAC as a region. Then we see this is, at the moment, I see it mainly driven by the exchanges. Both the Singapore exchange and Hong Kong exchange, together with the regulators, have issued directives for listed companies. And those are stepping up. So, for example, for Hong Kong, we see this comply or explain regime at the moment. So there are guidelines for ESG reporting, but you can explain away why you're not following them. But for the financial industry, for financial year 2023, so next year, these become compulsory. So regulatory reporting requirements are stepping up. And I see another factor is even more important, maybe, and that is that fundamentally all of the larger insurance companies have global ties, of course, or are global companies themselves. And so the EU taxonomy is influencing the whole supply chain, because, for example, in scope 3 GHG emissions, you have to report on your supply chain. And so requirements and benchmarks that come up in Europe trickle down through the supply chain also to Asian suppliers, Asian partners, Asian customers.
Mm-hmm. So really kind of like bring the whole effect globally in that sense. I want to go back to perhaps the point that you brought up, Timo, about customers really wanting, sustainability in that aspect. We want to talk a little bit more about the shift from, shareholders to stakeholders perspective. How are the individuals' mindsets and incentives changing when we refer to sustainability? Maybe to you.
Yeah, thanks. If I got you right, we have to really think about what customers want by now or are going to believe in the next years. And to bring it on point from the insurance perspective, it's a great chance because firstly, insurance industry has a great topic, so to say, addressing sustainability from a reputational side. So to have the stakeholder management perspective, the whole company or the whole industry has to address CSR topics and has to keep in mind how the sustainability impact of its own business is. And that's what Christoph says before. And on the second perspective, it's a great chance, because that's what I think you asked, Jessica. All the financial products can profit from the sustainability topic. Why? Because, as you all know, financial products, and especially insurance products, are low involvement products. People do not interest all the financial topics, but with a second scope, so sustainability as a second scope, and that's what regulation says. It's an additional scope to the whole product side and to the distributional side. The industry has the chance to really promote those products in another way and to do good things with financial products. So to say, if people save money for their retirement, they can also, in addition, do something good for the planet. And that's, I think, a big chance that insurance industry is taking by now. And because of that, turning back to Christoph, it's really, really important that the whole industry changes to be transparent and to be authentic, promoting all those sustainability topics. And the speed, that's what Christoph also said, which is on track by now, is so fast that insurance industry really needs help to transform in this speed and this time to promote all the insurance products by now.
Perfect. Christoph, what's your take on that?
Yes, I mean, I fully agree with Timo. I would call this a really like a paradigm shift in the way that society sees organizations, and especially for-profit organizations, companies. In the past, in this shareholder view, you said, well, if the company is making money, then it's obviously creating some value for its clients, its customers, and that's fine. And it's creating value for shareholders then. And nowadays, this is just not enough. We've realized that the role of organizations in society is also to look at their impacts. I mean, this is what the new reporting standards all talk about: materiality, managing your positive and negative impacts, and looking at a triple bottom line of profit, people, and planet. And this is also why sustainability has moved from the CSR department, like just looking at corporate social responsibility and being closely linked to marketing. And you can still see that this is in some insurance companies, it's still the case. But in general, this has moved to the Chief Sustainability Officer role, to the CEO office. It's on the CEO's agenda. So this is really about corporate strategy now, and integrating the stakeholder perspective in your core business and not just in your marketing.
Mm-hmm. So we looked at some of the drivers. We looked at, how companies are changing their perspectives when it comes to sustainability. I want to look maybe forward and discuss a little bit more about current and future opportunities. Bring it also back to the insurance space. Where do you see, the most relevant opportunities lying around across the value chain? Maybe Christoph, we can start with you this time.
Yeah, there are really so many opportunities. So one thing I would start with is, of course, the opportunities in climate and just adapting to what changes with climate. And there's a lot of opportunities there. One thing is asset management, and in a way, there's already a need from a compliance perspective to invest with a sustainability perspective and with such markers and benchmarks in mind. On the product side, we're looking also, again, climate related, at new risks. And so TSFD is an important element in reporting, but also in all organizations, not just insurance companies. Now integrate TSFD, so the effects of climate on your business model and the financial effects. If you look at that, then this again is an opportunity for insurance companies to offer new types of products as a risk carrier. And maybe a final area of opportunities is about being a technology innovator. And this is also where we support our clients at Zülke, looking at new business models, for example, in prevention of damages and of loss, and using technology. That's a big topic for reinsurance companies, for example. I've seen that at InsurNext, the industry meeting that just happened in Dortmund, that this role of technology innovator has been emphasized a lot for insurance companies. And I think this is really going away from the traditional business model of insurance companies as mainly risk carriers and asset managers.
Maybe in addition to that, Christoph, ladies and gentlemen, I think we have to keep in mind and really realize that insurance industry is the most impacted industry for this topic, for sustainability. Why? Because as Christoph mentioned, 3 points. Firstly, they invest. So German insurance industry has assets amounting half the size of the Bruttoinlandsprodukt, GDP. And so a lot of investment. Secondly, as Christoph also said, it's the risk carrying moment. So impact underwriting is the second pillar of how to really transform economy. And thirdly, they of course have their own operations, and that's what Christoph also described with the sentence that it's the core business that it's really affected by this paradigm, because the whole value chain has to transform in a way that takes into account sustainability questions that are really new questions and that are really new topics. And the problem or the chance in another perspective is that the speed has to accelerate in such a short time that insurance industry is not able to transform in that way alone. So there are cooperation potentials that are on the same level as digitization transforms the whole industry. So in my opinion, maybe, and as a final statement with a view on the time, we all have to keep in mind that sustainability is a new paradigm that is a mega trend, and that it's also important, or as important as digitization, and the insurance industry is impacted, I think, most concerning or because of the business model. And that's why we have to talk, and you can talk, and you have to think about how to cooperate and how to supply the insurance industry transforming in the required way.
All right, sorry guys, a little bit, but I think you continued there, so that's amazing. I think we're right on time. Really super glad to have both of you experts here from the 2 different regions, from GSN as well as Zülke Group. I think we can wrap it up here. I think there are some questions from the chat, but you know what, we are just gonna send it over to you offline, and then you can take those. But thank you so much, Christoph and Timo, for your time. Really appreciate it. And right now, I'll pass it back to Gara and Laura to start the first round of subtopic around management of internal carbon emissions then.
And thank you again, Timo and Christoph, for this super insightful fireside chat and for sharing your perspectives around sustainability and its applicability to the insurance sector. Now I'm going to give the floor over to our expert, Laura, who will start by introducing the first innovation trend that we will dive into today. Laura, are you around?
Yes, even with my wrong name, but I'm here. So thank you so much, Gada, for the introduction. Super happy to start with the first fundamental topic regarding the management of internal carbon emissions. which is actually touch basing all the industries and insurance in particular. Let's start from a basic definition. So when we talk about the carbon footprint, we refer to the whole amount of greenhouse gases directly and indirectly produced to support a person's lifestyle and activities. Carbon footprints are usually measured in equivalent tons of CO2 during the period of 1 year, and they can be associated with an individual, an organization, a product, or an event, among the others. So when we expand and we apply this concept to a corporate carbon footprint, we include all the emissions that are influenced by a company's decisions. Why is it so important? Because it's a measure of resilience. ESG parameters have been found to have a significant predictive power to identify those companies that will have a higher financial risk. And this is valid both in terms of your internal perspective, but also on your insured businesses, for example. Let's see then how to measure them. A company emissions are divided into 3 so-called scopes. The scope 1 emissions are called direct emissions from own or controlled sources. In other words, these are all the direct results of a firm activities. The scope 2 emissions are indirect but own emissions generated from a company's purchased energy. Scope 3 emissions are all the indirect emissions that occur in the value chain of the reporting company, including both upstream and downstream emissions. Given nowadays supply chains complexity, they are very, very hard to measure, and they're actually called the holy grail of the emissions. What is extremely relevant for insurance companies, and will be our second major topic of today, is investment. Where we drive our capital is indeed one of the most impacting factors. Now that we know everything on how to measure our footprint, let's see how to offset it. First, eliminate. Identify the most impactful actions across the value chain and influence business decision towards new business model or operation. Second, reduce. Opt for efficiency and optimization approach in operation and energy management. Third, substitute. Current energy sources with renewables and purchase inputs and services with a lower associated footprint. Last but not least, compensate. Only for those unavoidable residual emissions and support climate action to go beyond carbon neutral. Now we want to leave the stage to 2 startups that are really applying these technologies within the insurance space. Without further ado, I will pass it to Nadine, founder and CSO of Klima.metrix, automated carbon footprint calculator software for companies.
So welcome as well from my side, and thank you also for inviting me. I'm Nadine Michalske, co-founder of Klima.metrix, and I'm stepping in for my co-founder today, for Max, because he is in a very important meeting. He's taking part in the working group where we can comment and give feedback on the rework of the current regulation. I think which is really important to have the perspective of the newcomers of the digital sector. As we just heard, digitization is very important, and in my view also an important part to drive the transition of the economy. So what I want to talk about today is carbon accounting in the insurance sector, and as we are developing software solutions for carbon accounting in different industries. And now we are coming to what is carbon accounting about. I don't have to talk about this one anymore too much because it has just been done. Thanks for that. So we see the different scopes here, how to calculate carbon footprints or how to do carbon accounting. So the GHG protocol is a standard for reporting for companies. And this is, of course, also what our calculation methods are serving for. And what we want to do is look a little bit at the historical development. So it was started to look at the scope 1 and 2 emissions, and especially for carbon intensive industries like power station, airlines, steel production, etc. As they had to take part in the European emission trade system already in 2005. Yeah, and scope 3 was becoming more relevant for in the next phase, in the phase 2, for all large companies, when the non-financial reporting directive came up, and that was addressing all large companies that should report all relevant emissions, and especially in the manufacturing companies, you can see that scope 3 emissions sometimes make up to 90% of their emissions. So this is something you really need to look at, even though it's sometimes companies question it because it's so indirect. It's not coming from my direct company, but these are emissions that kind of go into your product or services that you offer in the market. And so it's really relevant to look at that. And now we are in the middle of phase 3, looking at financed emissions. So the financial industry has to look at the loans and investments, as we just saw, because these are facing large risks, because they put their money in now, but they want to get the profit back within the next 10 and 20 years. And as we know, the development of the climate change is massive, and it can mean that a company is maybe not able to market their products or services anymore in 5 to 10 years if they are not aware of their climate risks. So the carbon intensity of your loans and investments, etc., are a very important indicator to look at your climate risk if you're a financial industry institute. And it is also driven by the central banks. So coming to risk, of course, this is what the insurance industry is about. So now that we are entering phase 4, where insured emissions also need to be reported, and which will also be a challenge for many companies, because what is always the challenge is to get the relevant data, for the calculation, especially of the scope 3 emissions, because here you need data that you can't gather within your company. You need data from the companies you invest in, for the companies or project you're insuring. And the good thing is, there are many parallels already between the financial versus the insurance CO2 accounting. So we are both covered in the GHG protocol scope 3.15. So we have the same reporting category. We both use the calculation standard PCAF, and we have a pretty similar attribution principle, which is for the money in the financial industry and for the risk in the insurance industry. And of course, money is also related to risk, of course, in the financial industry in this case. And so explaining the PCAF, so the calculation standard. So there's always sometimes people mix up reporting standard and calculation standards. So the GHG protocol tells you how to report, and the PCAF tells you how to calculate. And this is based on following 2 basic principles. One is how to calculate the emissions of the different projects or companies or buildings that are getting financed or insured, and the attribution factors. This is how much of this project, company, or building has to be attributed to this financial institute, for example. So it's, of course, if you, for example, invest 10% into a project or company, then only 10% of the emissions are only attributed to you. And we gathered already a lot of experience in this both fields. So starting with the emissions calculation, this is, of course, this is something we started with. We developed a lot of emission calculation methods and have proved that with existing clients. So you can have different calculation methods to develop, to calculate different emission categories, and because sometimes you have really different data situations in companies, so you need different methods to come to a result. And very often, and especially in the scope 3 category, companies have a very poor data situation, actually. And so we also develop prediction methods to get to far better results, also when you have a very poor data situation in your company. And yeah, but of course, we also have up to very precise calculation methods in the software that is using real consumption data. And this for different categories like real estate, vehicles, company, etc. And here's a small selection of our clients that we have, like PIS and Blanc & Fischer. So we have many from the manufacturing industry, but also 2 of the top 10 construction companies in Europe that we are very proud of, and many more. Yeah, and coming to the attribution factors, also here we have a profound experience. We develop methods for generating these attribution factors out of the data situation of our existing clients. So the one is that we can tell you is ING. We won them last year, but this year we also got 2 new banks as clients. So we can really say that we cracked the attribution factor nut, which is sometimes dealing with data from banks, of course, is a not so easy thing. And what is also good for you to hear is that this all can be used and applied for the insurance sector. So the emission calculations methods can be used, and also the learnings for the attribution factors from the financial industry can be used and can be transferred for insurance companies. And so what just came up in the PCAF are 3 suggestions how to calculate the attributions for the insurance companies. So 3 methods. One is premium based, so using the profit. One is contract limit based, using the claim amount. And one is capital based, using the book value. And what we are looking for at the moment is for interested insurance companies that want to develop with us the easiest calculation method for the industry. As we know that the calculation is a real challenge for many of you. And if you're interested, please drop us an email, or at my co-founder Max at Klima.metrix.global, and we are happy to talk about it with you and look at your data situation and see what is the easiest solution for you to get valuable results for your portfolio calculation, so that we can together get closer to our mission, that the carbon footprint should be a concern for the companies, but not the calculation, of course. Thank you.
Thank you so much, Nadine, for that pitch and for being here today. To our audience, you should have seen a poll pop up on your screen now to select whether you would like to be introduced to Nadine after this event. Let's move on to the next pitch. I would now like to introduce you to Anna from Klima.metrix, an AI and blockchain-based platform to buy and sell carbon credits. Anna, feel free to share your screen whenever you're ready.
So thanks everyone for inviting me to this great event. It was lovely as well, of course, to meet Nadine. It's coming quite good, the presentations, because basically what we are doing comes after what Nadine's company is doing. They measure obviously the footprints, and then our company would come in. We don't work in the mandatory compliance markets, which is quite important, especially with Europeans on the call that are used to the compliance markets. I will not spend too much time on the difference, but in short terms, the difference is that we come in when companies want to go beyond the regulation and they would like to fulfill pledges, for example, that they have set themselves to reduce their emissions to say 30%, 50%, and more of those pledges is basically what we're seeing and hearing in the market, of course. So my name is Anna Stablum and I'm a commercial director at Klima.metrix. We are based here in Singapore. We were set up by DBS SGX, Standard Chartered Bank, and the wealth arm of the Singaporean government, Temasek. And we have come up with a solution for how corporates, such as insurance companies, can easily access voluntary carbon markets and buy trusted carbon offsets as part of their overall decarbonization strategy. And that's what we heard as well from previous speakers, that you need to have a strategy in place. It's not just to come and buy offsets. So this is what we're going to go through today, and I'm jumping straight in. So a carbon credit is important to understand, provides funding to projects that remove greenhouse gases from the atmosphere. And not just that, the credit will provide income and alternative livelihoods so that communities no longer need to do, for example, slash and burn, which is clear the land for palm oil or pulp and paper plantations. And instead, the communities can help protect the forest as carbon sinks. So if you've ever lived in Singapore, I'm sure you've experienced the haze from these fires firsthand. So at this point of time, the company CIX is focused on natural climate solutions. It's also because we care about biodiversity loss. So I'm sure that you're aware that experts talk about a sixth mass extinction. And I'm sure you all remember that the last one wiped out the dinosaurs 65.5 million years ago. So natural climate solutions can provide around 30% of the emission reductions that are needed to limit global warming to 1.5 or 2 degrees, which is also what we heard earlier in the chat. So while also supporting many, of course, of UN's other sustainable development goals. But going forward, CIX will also work with other types of credits. So I'm sure most of you are already measuring your carbon footprint, just what Nadine was going through, and setting emission reduction targets. And that's great, of course. Unfortunately, though, many of the emissions will be hard to abate, very costly, and for some, it will take time before new low carbon technologies will be there. This is when carbon credits can help you. So most large companies are currently looking at carbon offsets as an alternative way to reach its net zero goals, together with other in-house things, and of course working with the supply chain, as Nadine said. So Swiss Re, for example, has made a $10 million investment in Climeworks. It's a Swiss-based direct air capture startup. For us here at CIX, trust is a key word, and it guides us in everything that we do. So our clients must be able to trust our products, our execution, our oversight, and buyers in turn must use these credits in a responsible way. So it's not enough to just come and buy credits and claim that you're carbon neutral. So for clients then to trust our credits, we use internationally verified standards, both for the carbon sequestration. And like I said earlier, we're also focused on the project's impact on both communities and the benefits in relation to, for example, biodiversity. So we use third-party satellite data, for example, and we also have a committee with experts that help CIX and ensure that the projects we provide on our platforms actually are high quality and high quality credits. So we source the credits and we put them up for sale on our 3 platforms. So the first one is our answer to Airbnb. So you can go in and you browse the various projects and you buy off-the-shelf credits from trustworthy project developers around the world in various areas. Or you can also participate in auctions. So we're seeing a lot of interest from banks, for example, that will buy large inventory that they then can sell on to their clients. And in the auction, we use basically the transparent price discovery mechanism to make sure that as a buyer, you don't overpay. And as a seller, we have this price discovery for more bespoke projects. Or if you have more experience, so why don't you participate then in our spot platform that we're also launching at the end of this year? And that will be followed by a futures exchange, which will work a bit like any of the commodity exchanges that you might be familiar with. So for most corporates, so the first stage in your journey would be to join CIX and sign up for Marketplace, our Airbnb platform, where you can then read about all the projects, you understand more about our focus on quality, and the co-benefits in areas, like I said, such as biodiversity or the community impact. So already today, please sign up to our community. You will get automatically notified when we run events, webinars, and learning programs. So that will increase your knowledge about voluntary carbon markets and what we do here at CIX. Thank you very much.
Thank you so much, Anna, for your great pitch. We actually have a couple of questions from the audience. The first one being, which markets will Klima.metrix operate in?
So we're setting up a global exchange. So anyone from anywhere in the world can come and buy projects are also hosted anywhere in the world. We will, like I said, during the pitch, have more types of credits. So we will have different types of, we're moving into household devices, for example. We will move as the market matures into removable credits from technical sources. So we will be operating in a wide variety of credits for global markets.
Great, thanks. Last question for you is, what are your standards for the project?
Yeah, the standards are very key, as I hope I really got through during the pitch. So CIX, we look at quality across 4 different perspectives. We obviously look from a carbon perspective, the carbon attributes of the project. We look at the biodiversity, and we look at the impact on the communities, as well as we look at risk and governance, which is obviously something for the audience here very well aware of risk in various jurisdictions in the world.
Brilliant, thank you so much. So
Thank
for
you.
our audience, now you should have received a poll on your screen to select whether you would like to be introduced to Anna. Thank you again, Anna.
Thank you.
Thank you again to Klima.metrix and Climate Impact X. So great to see how innovation is having an impact on the management of internal carbon emissions. Let's move on now to our next topic, ESG investments. For this, I would like to introduce my colleague, John Ang, Corporate Partnerships Manager, dialing in all the way from Singapore. John, go for it.
Thanks, Gada. A very good morning and afternoon to everyone here with us today. My name is John, and I lead corporate partnerships for sustainability in the region. For this segment of the session, we will be going through trends in ESG investing and the huge role it will play in the financial services industry. Next, please. On a fundamental level, ESG stands for environmental, social, and governance. Institutional investors are increasingly applying these non-financial criteria as part of their due diligence process to not only identify material risks, but also new growth opportunities. There are 2 areas to consider when ESG investing. First, your direct impact on ESG. An example of this would be a direct investment into a solar company that fuels the growth of the alternative energy industry. Second, your indirect impact on ESG. An example of this would be analyzing the indirect impact of the solar company that you just invested into. Do they source raw materials ethically? Do they promote gender diversity? Or do they hold themselves to strong safety standards? Next, please. We are all aware that direct ESG investments carry high risks, but there are also low risk alternatives for the more risk averse investor. A clear example of this is green bonds. The green bond market has grown at an astounding pace and is expected to continue this growth at an average 71% CAGR over the next 3 years. Specifically, 1 trillion by the end of 2022 and 5 trillion by the end of 2025. This presents a great opportunity for insurers such as yourselves to manage your investment risk while participating in the burgeoning ESG investing space. Next, please. When we take a look at why insurers are considered laggards in ESG investing and reluctant to invest in ESG projects, the numbers are quite telling. 3/4 of insurers do not look at ESG factors when investing. 2/3 do not see ESG investing as a valuable business opportunity, and half do not view their climate impact as important or substantial. There are 2 key reasons driving this negative outlook. First, the inherent long-term risks, which are beyond most insurers' risk appetites. This is especially the case for P&C insurers who have a much shorter investment time horizon. Second, insurers feel that their policyholders don't see a direct link between their policies and invested assets. While there is still some resistance, there are some key driving factors to insurers taking an interest in ESG investing. Next, please. Firstly, we are seeing a huge change in the market. Across the board, governments are beginning to take ESG regulations seriously, with both the EU and ASEAN mandating ESG reporting for all companies. This leads to huge opportunities for startups specializing in this space. Next, please. Aside from keeping up with impending ESG reporting regulation, ESG investing also brings 4 key benefits. First, asset optimization in the form of removing old economy assets and sinking ships. Second, significant financial upside from getting in early into industries of the future. Third, acquiring customers who are becoming increasingly concerned about ESG issues. And last, maximizing employee productivity in terms of both morale and preventing labor strikes, as employees are also taking a stand in employers' ESG practices. Next, please. With that, let's take a look at some of the startups doing some incredible work in the ESG space. Back to you, Gada.
Thank you so much for that, John. It's great to see what the future of finance will look like and why insurers should begin to incorporate this long-term perspective, not just for the protection of our environment, but also for the internal benefits ESG investing can bring. So let's now introduce our first startup. We have Ronnie, co-founder and CEO of Green Arc Capital, which provides institutional investors with credible and transparent impact measurement and reporting. Without giving too much away, I'll hand it over to Ronnie. But Ronnie, if you can just keep in mind the 5-minute time frame.
Hi all, my name is Ronnie from Green Arc. We are an ESG and impact analytics fintech based out of Singapore. The area that we are going to cover is a specific subsegment of ESG called impact investments. Now, before that, a little bit of a background. As per Deutsche Bank research, by 2030, 95% of all investments, or $125 trillion, are expected to be tagged as sustainable or ESG investments. While this is a mega trend of a generation, to bring some sanity to this, a number of regulations have been pouring in from governments, multilaterals, and industry bodies. As I mentioned, there are multiple sub-segments that exist within the broader sustainable investments. To give you an idea of the overall spectrum of investments, on the extreme left, you see the philanthropic investments or not-for-profit investments. And on the extreme right, you have the traditional investments, which are single bottom line. In the middle, you have the sustainable investments, which have 3 areas within that: impact investments, ESG, and responsible investments. Now, responsible investments are where there is negative screening around alcohol, tobacco, etc. ESG is where you do screening around E, S, and G risk factors of an organization, inward-looking risk factors. And impact investments is where you look for the positive social and/or environmental impact generated in addition to the financial impact of an investment. This is one of the fastest growing segments within asset management, and it's a $2.2 trillion market as of last year. Now, why do financial institutions want to measure impact? Firstly, this allows to bring down the cost of capital. And secondly, it helps to increase the revenue by providing access to a wider investor pool. This is particularly valuable for banks who service impact sectors, as well as asset managers who have products for with underlying servicing of impact sectors like small businesses, agriculture, education, etc. But this access to this market is fairly limited today, primarily due to limited availability of in-house expertise and also due to expensive consultants. This leaves out the vast majority of financial institutions from impact capital markets. Now, introducing Green Arc's our ESG solution, which democratizes impact market access. Through our solution, which has an accredited methodology aligned to global standards. An industry-first impact patent for calculating impact using loan data and processing over $500 million of notional of loans in an hour compared to weeks taken by alternative solutions. And contextualization at a geographic and sectoral level for 200+ jurisdictions. The solution integrates large data sets across socioeconomic benchmark from 200+ jurisdictions and impact data from regulated loan data types from financial institutions to provide granular metrics. To give a bit of a context on how does it compare, there are 300+ ESG and impact solutions available in the market. But if you look at impact measurement as against ESG risk, and specifically for private debt, or which includes loan markets, GreenArc is the only solution that is available in the market today. We have a number of active engagements with large financial institutions, as well as government institutions, lending programs. The most recent one is a government, US government program that we are measuring impact for. In terms of assets, we have over $1.5 billion on our platform. And we also have some active partnerships with large fintechs and consultants in the financial institution space. A number of accolades from Asian Development Bank, the MAS, Capgemini, Plug and Play, etc. And in the interest of time, I'll stop here and happy to take any questions, or feel free to reach out on the contact I've given here.
Thank you so much, Ronnie. Great pitch. So we actually have two questions. So first one is, on which indicators does your impact measurement system rely on?
Yeah, so the indicators that we use are the most recognized ones. So the UN SDGs, of course, and in addition to that, the IMP's 5 dimensions, as well as the Global Impact Investment Network's IRIS Plus catalog of metrics. So the IFC principles, of course, is aligned to these. So from a financial institution perspective, these are the metrics that we use.
Great. And last question is whether you already have a use case within insurance industry, and if you can like a bit explain this example.
No, the area that we have been focused on so far is on the other side of it, the asset side. So banks and asset managers is where we have focused till date. But this is very applicable for insurance industry, given it is the liability side. So from an impact measurement perspective, as one of the speakers was saying earlier, insurance is very high impact, and the same can be applied as long as the data for the insured is available.
Great. Then let's hope that this event brings you some new use cases within the insurance industry. Thank you again,
Thank you very much, Laura.
And again, to the audience, you should have seen the poll on your screen. Let me know if you want to be connected with Ronnie and to talk to GreenArc Capital again. Now, our last startup for this ESG investment topic, here with us is Christian from Fincite, robo-advisor for green investment.
Perfect. I'm Chris. I'm a senior account manager at Fincite, and I'm responsible for new business and accounts. And what is Fincite? We are a B2B software as a service fintech, and we do focus on banks, asset managers, and insurers alike. And what is our vision? Our vision is to make you advisors and also your customers happy by enabling them to make the right investment decision with the help of what we call financial intelligence. And today, we want to make you advisors, but also your customers happy by making you guys ready for sustainable investments. So we know that currently all the sustainable measures and sustainable finance within your institutions and within financial institutions is mainly driven by regulatory initiatives. And we also understand that your business model and also your technical infrastructure is pretty unique in its own way. So that's why Fincite will support you integrating sustainable finance, regulatory measures, but also voluntary measures and also ESG fund measures with what we call software as a service Lego bricks. And this would be Fincite size. And in order to show you that our sustainable platform fits for all of your business processes, I just want to show you real quick a little chart. So for you, it might be that you only are engaged in asset management, in advisory, in self-execution, or you just engaged in all three combined. And we also know that regulatory measures currently tackle onboarding and risk profiling, advice and investment, portfolio management, as well as reporting. So for example, if you're an asset manager, you can come to us. We help you implementing a sustainable finance platform or software for portfolio management, for reporting. If you're an advisor, we have a tool for onboarding, risk profiling, advice, investment, portfolio management, reporting. So I think you know the deal and you get the idea. And the same is true for self-execution. Yeah. So our software supports you in every matter, in every regulatory measure you guys have to implement, and it's super easy. It's a plug-and-play software we have. So you have your infrastructure. We just put our Fincite size Lego bricks, software as a service Lego bricks on top, and then you have your final ESG solution. But what are the elements European regulation currently tackles, and what are the investment process steps, and what are the different software elements we can support you with? We know that you guys have to adapt your onboarding and also your risk profiling. The idea is to say how green my customer wants to invest. So you have to retrieve customer sustainable preference. I'm not telling you new stuff. You already know that. The deadline here is August 2020. We have one module, one software for onboarding and risk profiling, which is ESG compliant according to European regulations. The second element is advice and investment. So the idea is how green is the customer portfolio and how does his or her portfolio help the environment? So you guys, and you know that you have to give transparency over sustainable impact of your customer portfolio. Deadline again, August 2020. Portfolio management, the customer wants to know what sustainable instruments are to be in his portfolio. So you have to offer sustainable portfolios and products to the customer that are in line with his onboarding and risk profile questions he gave in the very first beginning. Deadline here is ASAP. And of course, reporting is always nice. So you want to show that your bank and your insurance business takes good care of your sustainable investments. So you can publish ESG reports to the customer so that he really understands what is the deal with ESG and how green is my portfolio actually. These are the four elements our software does cover. And now just some nice screenshots out of our application. Just let's think it in. Let's have or let it have an impact on you. If we speak about onboarding and risk profiling, of course, we ask for Article 9, Article 8, principal adverse impacts. The customer can select the percentage of the ESG or the sustainable products he wants to have in his portfolio. And he can even tell you what investments he wants to be associated with and what investments he does not want to have in his portfolio. If you talk about advice and investment, of course, we enable you advisors to give a full overview over the ESG performance, over the entire portfolio situation to your customers. How green is his portfolio actually, so that the customer really feels well treated in order to get his sustainable beliefs. If it's about portfolio management, we can give your portfolio managers a really cool tool in order to impact, in order to build a sustainable portfolio, include or exclude different industries, different measures. And if it's about reporting, we can build you really cool PDF reports or dynamic reports on the front end. For example, that everyone, also the customer, understands the ESG and sustainable impact of his investments, of his portfolio. If, for example, we can show that the companies the customer invests in are or produce 30% less CO2 than the industry average, or we just show the entire ESG performance of your customers' portfolio, of your customers' investments. So basically, if you're not satisfied with your current ESG processes in-house, or if you don't have fully have them in place, Fincite will be your partner implementing your ESG and sustainable finance platform. Thank you very much.
Thank you, Christian. Thank you for that great pitch. We are a bit short on time, but we have one question for you. Can you just tell us how long is the onboarding process?
How long in steps? It doesn't take more than 5 minutes. It are approximately 6 or 7 questions. Super easy because we don't want the customer to wake up the process, right?
Okay, thank you so much. And thank you so much for being here today. For our audience, you should be seeing the poll on your screen right now. If you want to get in touch with Christian, we'll make the introduction for you later on. All right, we are almost nearing the end of our session. Let's move on to the last topic of the day. Laura, I will leave it to you to tell us more on how sustainability is reshaping the product portfolio.
Thank you, Gada. Sure thing. So if we look at insurance companies, their biggest action towards their customer, of course, is the creation and sales of insurance product, right? And this is the reason why the insurance portfolio should be reshaped and new products should be created by continuously keeping in mind sustainability. Let's look at the drivers pushing insurance towards the creation of new sustainable products. First and foremost are, unfortunately, natural disasters, the most tangible consequence of climate change. 2021 was the most expensive year for natural disaster in Germany's recorded history, at least in terms of the insurance payout. Floods, storms, and other disasters led to payouts of about 12.5 billion. This gives insurance actually the opportunity to focus on preventive solutions, able to foresee and protect, and then after the disaster happened, offer the possibility of renewing with sustainable and resilient material. Second topic, the change in consumption habits. It is undeniable that consumers are paying more and more attention to where they decide to spend their money. According to a Deloitte report, younger and wealthier people are actually the most sustainable consumers. Not only when it comes to reducing single plastic consumption or the choice of sustainable transport, but 4 out of 10 consumers also give their preference to brands with ethical values. This gives actually the insurance the chance to attract these customers by creating products whose propositions are all around sustainability. For example, just offering circular economy services. The last driver is new regulation policies. Unfortunately, we don't have the time to go deeper in the regulation topic, but similarly to the wave of divestment we've been seeing in finance, insurance company can also modify the risk acceptance, the criteria, and thereby reject certain risk. For example, no longer working with industries that have been shown to have a particular negative impact on the environment. Let's have a brief look at some example of personal and commercial lines. In this slide, you can see some example of sustainable products for commercial lines. We have been seeing the rise of products for green fleets, giving the option to upgrade the company's fleet to hybrid vehicles for new vehicle replacement as part of an endorsement of the policy. Or again, policies giving discounts to companies with good ESG scoring, like Marsh, which has created a product that recognizes and rewards insureds with particularly aspirational sustainability commitments, so giving positive incentives, not only negative ones. Or again, programs for decommissioning late life assets, or special mention to parametric microinsurance schemes, like the one designed by AXA, which is designed specifically to protect coffee and grain farmers against drought and excess of rain events in Nicaragua. Also, the personal level possibilities are actually limitless, from policies incentivizing less polluting means of transport to policies that give benefits for generation of clean energy, green replacements, but also for green behavior at the individual level, similarly to vitality, but according to the sustainability lifestyle. We know, right, that for big change, we need thousands of single actions. As a last example, let me mention the new proposition of Liverpool Victoria for electric cars to incentivize the purchase of electric vehicles. Liverpool Victoria created this product that ensures that the driver are covered for all the additional needs that come along with switching to an electric vehicle, including recovery to the nearest charge point if a driver unexpectedly runs out of charge, cover for the batteries, charging equipment, wall boxes, cables. In addition, drivers will be also covered for over-the-air updates, reflecting also the increased use of connectivity in modern vehicles. Let me introduce our first starter for this last topic. Here with us, we have Oksana, project manager for Agricolus, which is making agri-tech sustainable through their cloud platform.
Good afternoon. My name is Oksana. I'm a project manager, and today I would like to show you what we are doing in Agricolus. Our company is operating in smart farming sector. We are providing with cloud applications ecosystem for different purposes, such as disease awareness and forecasts, decision support system, crop monitoring, farm management, end-to-end traceability. Our company is situated in a green heart of Italy, in Perugia. And we know from the first hand with which troubles and risks farmers are facing every day. For this purpose, 5 years ago was born Agricolus. We started as a small company with several enthusiasts, and till now we are pushing on to facilitate the farmers' work, providing with high quality software in agri sector. In our work, we are using different technologies. Such as physical and virtual weather stations, satellite imagery with a resolution of up to 10 meters. Also tracking the crop operations on the field. For smart scouting, we have developed internally our Agricolus farmer app. So basically, using your mobile phone, you can track. You can make the photos, and these photos from the field will be uploaded automatically to the system. And based on all this information that we are collecting, as well as if a farmer has some sensors or additional tools or hardware installed on the field, our platform is IoT agnostic. Using all this information, we are providing with forecasting models for fertilization, phenology, irrigation, pest and disease. And using these models, the system provides with prescription maps and data-driven recommendations. So using just a small button in the platform, which is called Decision Support System or DSS, the farmer has on his monitor the information that he can use to understand where, in which amount and in which moment should be the intervention done on his field. We are covering more than 130 crops. As well, we have developed for specific crops 6 vertical products. We are aimed to cover from small farmers to big agricultural producers such as cooperatives or associations. And we also provide with a free version for up to 10 hectares, which we are using to show and to disseminate the information on how digital farming, smart farming tools can facilitate the farmer's work. As well, we have the AgriTrack solution for big producers, where they are on one dashboard can see all the fields that are related to the cooperative or association, and to track the information in real time and make the data-driven decisions. Our business model is a yearly subscription, so the platform is based on SaaS. It can be achievable from your laptop or from your mobile phone. we have, as I told, 6 different verticals for grain, tomato, grape, olives, corn, and tobacco. If a farmer has more than one crop on their fields, we are providing with specific solutions such as Observa and Plus that combine the satellite imagery and metal forecasting to provide 330 customized recommendation. And as well, we have developed internally our own hardware, which is called AgriPlug. We are providing this hardware to track the field information. It's a small box that is installed in the tractor. And when the tractor goes through the field, it recollects the information and automatically uploads it to the platform. So you don't need to have a lot of different sensors just to collect the needed information. Through our work.
Sorry to interrupt, but we are short on time, so I'm going to need to stop you right there.
Just a few words that we are using the triple win approach in our work, and through our work we aim to contribute to CDG goals.
Can you tell us, does your solution include only a software platform, or does it also need any sort of hardware components to be sold to the client?
It depends on the farmer's needs. Usually we don't need to install anything else. We have the crop scouting app, and also when you are purchasing the subscription, the license, you have already the virtual weather station that provides you the possibility to calculate the vigor, chlorophyll, and water stress indices that are highly recommended for the farmers.
Okay. Thank you so much, Oksana, for being here today. To our audience, you should have seen the poll pop up already if you'd like to be introduced to Oksana from Agricolus after the event. Next, we have our last startup for the day. Here with us is Indra, CEO and co-founder of Overstory, which creates real-time vegetation intelligence at scale by applying machine learning to high-resolution satellite imagery. Indra, you've already shared your screen, so go for it. Are you on mute though?
Yes, I was still on mute. Thank you. Hello, everyone.
Now we can hear you.
CEO and co-founder of Overstory. I know it's running to the end of the event, so I'll keep it short and concise. As you all know, our planet is under pressure. There's more and more forest fires happening, and vegetation intelligence is critical to reduce unmanaged ignition of wildfires and the impact on communities. And sustainable forest management is the most effective way to prevent catastrophic mega fires. But currently, decisions are still often made on old data while conditions change rapidly. And that's why decision makers need access to accurate real-time vegetation data across large areas of land and simultaneously reliable predictions for the future. And this is where Overstory comes in. Overstory offers actionable vegetation intelligence at scale. We do this by identifying current likelihood of ignition and consequent of ignition. We predict future risks. We create optimized work plans, and we verify vegetation management work done in the field. And how does this look concretely? So first we look at the ignition risk. For example, a concrete example is a sick tree close to a power line that can fall on the line and ignite a fire. Condition of surrounding vegetation is alarming, so a spark could potentially lead to a big fire. The area is very remote and not easily accessible. Then we look at the fuel load surrounding that area. Can we see groups of dead trees? Do we see specific tree species that are more vulnerable to drought and fire? What are the current moisture level and density of trees? And then thirdly, how does this relate to the community and what's the impact on the community? Do we see defensible spaces? Because that can help prevent impact on the houses and on the communities itself. So how does it work? We apply machine learning to very high resolution satellite images. We use 30 centimeter resolution satellite images. And as a result of that, we can scan large areas of land. For example, here for a customer, we analyzed the full country of Spain. But most important, we still do that at a very granular level, on tree level. So for them, we looked at tree species on a tree level. Here we can see, for example, in purple, individual olive trees. And tree species is a very important underlying data layer to understand the fuel load, the growth of the trees, the vulnerability to climate impact and wildfires. But the beauty of satellite images is that it also contains near infrared and red at bench, and that tells us a lot about the health of the forest. So we can identify declining forest health and tree health over time. For example, if trees are infested with the bark beetle or other kinds of infestations and diseases. And this is important because dry fuel, dead trees are leading to more severe climate events or severe wildfires. In our platform, we visualize where assets are within wildfire zones and what their current risks are to ignite a fire, but also what the potential impact is of a wildfire on assets. We summarize it in our platform to give an overview of where these risky assets are and what companies can do to maintain vegetation to reduce those risks. So just want to present some business results case studies. You can download multiple on our website, but this is for electric utility that by using our platform identified a 46% efficiency improvement in their vegetation management work. So by using our platform, they could do more work with the same budget to reduce the risk of wildfires. Another customer projected a 13 times return on investment by using our platform. What they did is moving budgets from low risk areas to more high risk areas so that they could get a bigger bang for their buck in terms of vegetation management. So they could address the high risk areas and move budgets from those low risk areas there so that they could do more vegetation management over a larger area faster. So these are some of our current customers. We have customers across Europe, from Scandinavia to Southern Europe, Spain, Portugal, and across the whole of North America. Thank you very much.
Thank you so much. Thank you so much for your pitch. We have two questions. I will tell you both so you can go through them together. They ask, how many risks can your solution predict? And what is your accuracy rate in this prediction?
Yeah, so there's multiple layers to that question. So we really look, I think, as I mentioned, we're really on the preventative side because that's where you can have the most impact on preventing those fires, right? So the further ahead we can predict indeed what these risks are, the more effective also the vegetation management work can be. So we look often, our work looks months or even years ahead in terms of what the risk could be for certain customers in terms of how is the forest declining in terms of health, what are potential impact of changing weather conditions on the forest, so that translates also to the risk of the customers. And yeah, I think accuracy has different layers. I think the underlying accuracy, for example, of the data layers like the tree health or the tree species, we've seen 90–95% accuracy in terms of individual tree species and tree health. So it's very accurate because that's important for our customers. If they send people into the field, they need to make sure that there is actually a risk, right? So we also work, for example, a lot with electric utilities, and often like they have millions of trees next to their power lines, and often that it's that single tree that grows into the line or gets sick and falls onto the line. So it's very important to be very accurate in determining where those trees are that can cause a massive fire or outage.
Great. Thank you so much, Indra, and best of success with Overstory. I will pass it back to Gada now for the final.
Thank you. You all should have also seen the poll to be able to get in touch with Indra after the event. We did it. We've now come to the conclusion of our event. But give me 1 minute before you sign off. I hope you have enjoyed the fireside chat and the great startup pitches we had for you today. Just a reminder, if you clicked yes on any of the polls throughout the session, we'll be following up after this event to make introductions between you and the startups you would like to meet. We also wanted to remind you of our upcoming expo. If you haven't already heard, we're doing things a little differently this time, and we're so excited that we'll be hosting a pop-up expo in Amsterdam. We've never done this before. It's our first in-person event in over a year, so it's definitely a big deal. This will take place on June 28th and will signal the conclusion of our Batch 8 program. So you can expect to see pitches from our current batch startups, plus keynotes and fireside chats from some of the most relevant speakers in the industry. Spots are limited. So if you're interested in participating, please apply directly from the link you can access through the QR code here. And once we've reviewed your application, a member of our team will reach out to you directly via email with a ticket as a confirmation. This is happening alongside the Digital Insurance Agenda, or you might know it as the DIA. So definitely come to Amsterdam for the Insurtech Expo on the 28th, and then head to the DIA on the 29th. These are just some insurance highlights for the summer that you won't want to miss. We look forward to seeing you there in person in Amsterdam. So thank you once again to you, the audience, our speakers, and to all of our startups. My name is Rada, and on behalf of the entire Plug and Play team here in Munich and in Singapore, thank you for joining us. Ciao.